Welcome back to this week's episode of Coinscrum Markets. I'm Teana Baker-Taylor, and I'm delighted today to be joined by Tim McCourt, Managing Director and Global Head of Equity Index and Alternative Investment Products at CME Group. Tim, thank you so much for joining us.
Yeah, thanks for having me.
I'm very excited. It's great to have you on the show, and I'm personally really looking forward to learning more about your Bitcoin futures and the launch of the ETH Futures on CME. Before we kick off, perhaps you could tell us a little bit more about yourself and maybe a little bit about your journey into the alternative investment arena.
Absolutely, and really looking forward to our conversation today. Excited to talk about Bitcoin and the ETH Futures. And how I got into cryptocurrency, I think is similar to a lot of people that you hear. I come from the traditional finance space, so to speak. I've been with the CME Group for just about 8 years, running their equity index business line and their alternative investment products. And prior to that, I was an equity index trader on the sell side, spending about 13, 14 years as an equity swap trader here in the US. And moved to the exchange, and we started getting, a little bit involved in crypto, looking at Bitcoin, seeing what made sense for our customers, and just kind of immediately found it fascinating, right? So when we look at alternative investment products at CME Group, they tend to also cover products that offer an alternative investment profile to the marketplace in terms of uncorrelated returns, but also it's those things that don't necessarily fit into one of the traditional 6 asset classes. When you look at things like rates, foreign exchange, metals, equity, et cetera. So some of the other things get lumped into the alternative investment. So that's how cryptocurrency landed in my team's remit. And it's been fascinating. We first started. Yeah, exactly. It's been a good run for sure the last few years. And we first started with moving into the reference rates with our partner Crypto Facilities, who's now called CF Benchmarks, because that was our first foray. We wanted to provide some price transparency to customers around what is the prevailing level of Bitcoin in dollar terms. And then when we saw some of the further reaction to the needs around risk management, outside of just knowing what the price is, but how to manage risks around that price, that's really how we started to evolve from just the reference rate and real-time indices into the tradable product world with our launch in December of 2017. And, I think from that point on, over 3 years ago, I think there's kind of been no looking back for us. It's been a great ride, a lot of fun to work on, and really excited to see how customers have adopted the product.
That's amazing. Well, I come from a similar traditional finance background, not as cap markets focused as yours, but I know for me personally, it's been a refreshing change to have something completely different, on my plate as opposed to some of the more standard stuff, right? So you mentioned the evolution of the CME Bitcoin future since December 2017. So how in particular has the institutional participation evolved since then?
It's a great question. And I think what's interesting is when we go back to that time period, 2016, 2017, when we were working on the designs and validating with customers, we've always been focused on a institutional grade product, in terms of not only providing hedging or risk management need to some of the trading firms and crypto native companies that we were talking to at the time that were involved in the digital asset itself, but when you think about how other firms and institutions can access the market or use the futures in lieu of trading the digital asset to access the risk, to make investments. And that was something that we identified early on, and why we also went with the 5 Bitcoin multiplier contract back in 2017. So the thesis has always been there, and we've always seen some degree of institutional participation. Even back in 2018, we were seeing some institutions or institutional-like flow with the advent of crypto-only hedge funds or crypto-native trading firms. So the institutional flow was already there. But I think what we're seeing in the last, particularly, say, 6 months to 1 year, is really the rise of even more traditional institutional clients. And that's been a lot of fun to watch. It's been really exciting. And some of the things that we watch at the exchange are large open interest holders. That's a number that's reported by the CFTC. And that number tracks the number of large traders holding futures contracts. So for Bitcoin at CME, it tracks those number of traders holding 25 or more futures, which are those traders holding then 125 or more equivalent of Bitcoin. So that's a pretty large position when you think about it. And that number has consistently grown over the years, peaking in December of 2020, about 110 large traders as a record. Right now, we're just about 90 this week, so still very high, a little bit off the record, but kind of that lower left, upper right growth of those traders holding that much risk or exposure to Bitcoin is something that I think really speaks to not only the breadth of institutional adoption, but the speed at which it's increasing, because you can see the slope of some of that growth. And it's been really amazing to watch.
Yeah, well, we've seen, announcement after announcement over the last couple of weeks that kind of indicates that, confidence is becoming more entrenched, right? So it's interesting to see that that's reflected across the board. I guess, the attributes of being a regulated exchange traded derivative is, I'm assuming, more those attributes are more important to these institutional players. And how do you see that difference between the institutional kind of spot market and the futures market?
It's a great question. And we'd like to kind of summarize that viewpoint that in our markets, we view regulation as a feature and not a bug. And when we engage with institutions, they really want that tested, trusted environment and exchange and venue that they could trade on. They then welcome the fact that it's a regulated venue, whereas at CME, we're regulated as a designated contract market, a DCM, where our primary regulator is the CFTC. So there's a lot of certainty and comfort with how the market is going to work as a regulated venue. When we look at that, it's really the on-ramp for institutional investors, because it makes it easier not only for them to know how it will work once they're involved in the market. With our rule books are public, how we change our rule books require a certain amount of notice to the marketplace. CME is nearly a 180-year-old trading venue and organization. So there's a lot of trust with how it works when trading at CME. And then when you look at the fact that it's regulated, that then also gives further credence to their internal approval efforts, right? When you think about how some of the institutions have certain mandates or charters or certain internal compliance policies, trading on a regulated venue within, inside the US and inside that regulatory framework gives a lot of comfort and confidence for them to make that leap into crypto. So we do think it's a helpful on-ramp into the space. I think that's something that's differentiated when you look at unregulated platforms or some platforms outside the US. That's not to say institutions can't trade there. I just think it's an extra step in terms of getting approvals, getting comfort, understanding how it works, articulating the risks of trading on unregulated venues. And not every institution's there yet. So CME, the fact that you can trade Bitcoin futures the same way you trade E-mini S&P 500 futures, that's a really good thing for getting people to make that final step of going from interested to invested. Absolutely.
So you've launched ETH Futures last week, so continuing to build on the Bitcoin futures success. Do you have some early metrics on how it's compared with the initial Bitcoin futures contract launch in 2017? What's different?
Yeah, I mean, it's been a lot of fun. This is our third cryptocurrency product. We also introduced Bitcoin options back in January of 2020. And this is our third product, second asset, which I think that was a huge milestone for the team at CME Group. We're really proud to now expand our offering just beyond Bitcoin. And it's going really well. Launching new products can be a challenge. Building new markets in the futures marketplace presents unique challenges. And then when you look at things like building those markets on something that's still new to people as crypto, it's a lot of fun, but also a lot of challenge. But despite those challenges, we've had a really successful first few trading sessions and really pleased with how it's come. We've traded about a little under 4,400 futures contracts at this point, which is with a 50 Ether multiplier on those futures contracts. It's a little under 220,000 Ether equivalent. And we have just under 1,000 lots of open interest, 8 trading sessions in. So that's really great. When we look at how that compares against Bitcoin in 2017, it's a little bit different because let's think about the size of the assets, but it's when you adjust for how big the Bitcoin market is versus how the Ether market is as the second largest asset, it's going really well. When we look at the Ether equivalent and the Ether volume, it's doing about 50% of the futures volume that Bitcoin futures did those first 7, 8 trading sessions. But when you look at the underlying equivalent of the digital asset, those first few sessions, let's say the first 7 trading sessions is kind of where we have the data through at this point in time. We did about 37,000 Bitcoin equivalent in futures. On Ether, those 4,400 contracts, are worth 220,000 Ether. So then you get some notional adjustment, and it's about 50% of the value, which largely mirrors what we see in the underlying spot market in terms of the ratio of how Ether trades to Bitcoin. So I think that's a great success early on. And the fact that we've seen block trades, outright trades in a few of the first contracts. I think we've had trades in the first 4 maturities, as well as a block trade, spreads trades. These are all great signs of any market, let alone one that's only a week and a half old. So it's gone really well. Really pleased.
Well, it's a nicely timed launch, I must say.
Yeah, a little bit of luck and market timing always helps things along. I wish I could take credit for some of the backdrop of the news cycle, but it's certainly.
I'm sure the credit's due, but it's still a fortuitous timing.
Yeah, and I just think that really is kind of back to some of your comments a few minutes ago, where there's just continued growing interest and announcements from corporates and institutions, and I think that trend's only going to continue. So, timing is helpful, but maybe not surprising that we're seeing this continued upwelling in interest of Bitcoin and Ether.
Okay, so you mentioned that this is your third product, second asset. What's the criteria, the decision-making list when you're considering a new product?
Yeah, so it's a good question. And I would say our new product design process is largely the same across the various asset classes and disciplines, not particularly different than for cryptocurrency, but one of the key things that's a central tenet to our entire product development cycle is engaging with and validating ideas with customers. Our customers are a tremendous resource for idea generation because they're looking to solve real risk management needs. Yeah. They're looking to enhance their tools, enhance their risk management. They're looking to more efficiently access markets. So we constantly are engaging with them for the product development and what we should be focusing on next. Once that kind of idea percolates from customers and we look at it and we think it might make sense, there's also a fairly regimented process internally where we advance the idea through several stages, looking at, is it feasible from our perspective? Is it feasible from a regulatory standpoint? Is this a commercially viable opportunity for the organization? And then we also look at a very fundamental question of, can we build a two-sided, robust market around this asset? And that's really the hardest question I think that the product faces in the development life cycle is, yes, it could be interesting, but is it balanced? Do you have buyers and sellers that can naturally meet at the marketplace at CME? A lot of times products are really interesting. There's a need for risk management, but that market's a little bit one-sided and it's hard to build either the liquidity provision or the natural risk provider or liquidity provider. But with cryptocurrency, that's something that we've seen is there's a very balanced participation where people have very different needs at different times to manage their risk or access the market, which really makes us believe that we have the ability to provide an efficient, robust, transparent price discovery mechanism with the futures. Certainly what we've seen with Bitcoin over the last 3 years, and certainly seeing that early days with Ether. But I would say that's the largest gating factor, in my opinion, is can we build a two-sided market such that people can actually efficiently transfer that risk or exposure between counterparties in a transparent, efficient manner.
Okay. So is it fair to say that the ETH launch was really demand-driven?
Absolutely. Okay. Demand-driven. I mean, certainly we were interested in it as an organization as well because it's the second largest digital asset by market capitalization and daily trading volume. But that's why also when we look back, we launched the Ether reference rate, which underlies the future in May of 2018. So sometimes there's no secret sauce between reference rate and time to future, but I would say early on, we also saw that demand for equivalent transparency and pricing that we provided on Bitcoin for Ether. So in general, for cryptocurrency, I think we like the index route. I like the ability. My background is also in indexing, so I might have a bias. But when we look at that being able to then have that reference rate tied to spot transactions. So for example, in the Bitcoin reference rate and the Ether US dollar reference rate, we take spot transactions in Bitcoin dollar fiat, Ether dollar fiat from 5 constituent exchanges. So that's Bitstamp, Itbit, Coinbase, Gemini, and Kraken. And then in that 3 p.m. to 4 p.m. London timeframe, create that once a day observation rate. So the fact that we're tied to the spot market is also a great way to further assess demand. So we can introduce the reference rate, provide some of that price transparency and saying, okay, well, how does this reference rate perform? Does it meet your needs? Are we getting an adequate part of or an adequate representation of the spot market? Can we build a future on this reference rate? So there's some incremental things we can do along the way to further crystallize that demand and make sure we can move products to market in a way that comports with building that two-sided market with transparency. But I would say it's always customer demand driven, but that's not the only factor that we listen to, because we do have a responsibility to make sure we can build that market around to satisfy that demand.
Okay. So, furthering on from the index and you've chosen to stick with cash settled products. There is some argument to be made that a physically delivered or physically settled future provides a little bit more certainty, less, potential market manipulation on the spot side, depending on your school of thought. So do you see any demand for physical settlement, and would it be something that the CME would ever entertain?
Yeah, tough to say for certain if we would entertain a physical contract, but I can say we don't necessarily view it as a binary either or decision.
Okay.
The feedback we've had from customers right now is to focus on the financial. There are some customers obviously expressing interest in a physical. But the one thing, going back to some of our other comments, is the financially settled contract also just makes it easier for folks to get involved. It plugs and plays the same way in your broker's platform, your clearing member systems, the trading systems, the systems at CME. It functions the same way as a NASDAQ 100 index future. It's just a futures contract, settling dollars against the arithmetic price performance of the index. But when we look at some of the need of the financially settled product, it's important that folks understand these are regulated benchmarks.
Sure.
The Bitcoin reference rate and the Ether dollar reference rate are regulated under BMR out of Europe. They're the first regulated cryptocurrency benchmarks available to the marketplace. There's a robust methodology that makes it resistant to manipulation in terms of how they take the sample within that 1 hour window. So there are lots of things that go into the reference rate to make it that robust underlying. And at maturity, it still does converge to that price. So it's still a point in time. It is based on spot market transactions aggregated into that reference rate, and that's where the futures settle. Of course, there can be bases that develop or divergence between a futures and an underlying spot market. But even if we look at things like the equity index market, that governor of convergence at final settlement at maturity does keep these markets aligned and related. So I think even though some may prefer physical, that's not to say you can't get the same type of exposure related to price and be tied to the spot market through financial products, because you absolutely can. And that was a very central feature of our design, to make sure, even in a financially settled contract, it was still based on and converged to the spot market price discovery as well. Okay,
great. Thanks for providing a little bit more detail on that. So I think another key area is, hours of trading. So CME's trading hours are different, obviously, than the 24-hour nature of, the crypto spot markets. How has this affected, impacted, or has it at all, you and your clients?
I think without, necessarily getting into the weeds of why we necessarily can't offer trading every day because of the maintenance required around Globex, and notwithstanding the increasing chatter about the CME gap on Twitter and whatnot, it's just something that is an inherent design feature at present for the futures market. We do offer nearly 24 hours trading Sunday night, 6 p.m. Eastern through Friday, 5 p.m. Eastern. So it's fairly continuous. It's just really between that Friday and Sunday. Systems are down for maintenance on the weekend, and that's when we do all our product launches. That's when we do upgrades to the system. And that's just something that affects all thousands of contracts we have listed at CME. So it's tough to focus on trying to fix that just for cryptocurrency. But the feedback we have from clients is it's not an impediment. Those customers that need to access the market can do so via block trades at CME Group. They could also trade in the digital underlying markets and do EFPs over the weekends. So there are ways for them to transact. It's just that the order book itself is not lit or is not up from Friday night to Sunday night. But it hasn't been an impediment. It's something that I think we certainly hear from customers. I think it's interesting to watch people talk about the CME gap and how it provides the technical signals in the market, which is a side note. I mean, it's also amazing and great to see that crypto traders are using futures fundamentals to inform their trading decision when they're talking about the gap. I don't know if they realize that, but that's a great development, to see between the two markets. So even though everyone's talking about the gap, that's highly a futures technical analysis of will that gap get closed. So that's great to see that type of interrelatedness and observations between the markets. But we'll continue to work with customers and make sure that we're meeting their needs. And if those needs evolve further, we'll try to work with them to address that. But hasn't been a limitation to adoption or their risk management so far.
Okay, cool. So not all derivative product launches are successful. How did these crypto contracts stand by comparison to other launches over the years? We've kind of covered some of the metrics around, the early 7 weeks or 7 trading periods rather. Looking across all of the products that you guys have put out over the last, 3 years, I guess it is now. How do you think that they compare to other launches, maybe across some of the other asset classes that you've been involved in?
It's a good question. And I would say one thing to keep in mind is that probably success has a different definition by contract and by product. Sure. Different markets have different underlying market sizes, different needs that we're trying to serve with their contract. And success can look a few different ways, right? When we launched Ether on February 8th, we traded a few hundred contracts on the first day, and that exceeded our expectations. Wild success. Because of what we were able to build in a fairly still nascent and new marketplace. And that was the success. You contrast that to something like my team has worked on was the micro E-mini futures launch in equity indices, which is the most successful product launch in CME Group's nearly 180-year history. And that was back in May of 2019. We traded over 310,000 futures contracts the first day. And that was an enormous success. So it's hard to kind of make that apples to apples comparison in terms of just contract volume. You kind of just know what success is when you see it. And it's really around how many clearing members did we have on day one? How many liquidity providers? How many clients showed up on day one? Did we have robust two-way price discovery in the order book all day long across Asia, European, and US trading hours? So those are there's a lot of qualitative measures that also go into success. And I would say Bitcoin back in 2017, Ether here in 2021 exceeded our expectations, certainly successes in their own rights. And especially when we look at something like Ether, we had about 55 accounts trade the product on the first day. And that's phenomenal, right? To have that type of both liquidity providers and end users, customer paper, as we like to say, in the future market show up on day one, enormous success. But you can't just look at the volume. You can't just look at one metric. So hard to kind of compare versus all, but the fact that we've had great day one volume in Ether, it's sustained its growth. We're growing open interest. Yesterday, for example, we traded over 1,000 futures contracts, so also more than doubling your volume in a week and a half. These are all the things that really show success day over day, and very pleased with the progress so far.
Okay. Well, I have a little mini rapid fire round for you around the contract specifications. So how far out are the contracts quoted?
So great question for both Bitcoin and Ether. We have the 6 nearest monthly contracts that expire on the last Friday of the month. And then we'll always have the 2 nearest Decembers. So right now we have between 6 months, and then we have December 2021 and December 2022 listed. So there's usually 8 contracts in the market at a time for both.
Okay. And how deep is the liquidity further out in the curve?
It's pretty good, actually. It's hard to say the exact number, but one of the things that we've seen in cryptocurrency that doesn't always materialize this early or sustained is we have a lot of spread quoting and spread trading also going on in Bitcoin and Ether. So that helps the order book in terms of depth across the entirety of the curve. So we have orders and quotes being provided, at least I think about 10 levels deep in most of the maturity. So it's great to see, and we'll continue to work to improve that over time, but it's off to a great start.
Okay. What are the price limits or halts, circuit breakers, et cetera? Where are they set, and how often have they been triggered, if at all, so far?
Yeah, it's a good question. So, hard to say historically how many times it's been triggered. Ether, I don't believe has triggered one yet. But the way they work for both Bitcoin and Ether is that we have what's called a dynamic circuit breaker. And that is on the previous day settle, we establish a dynamic circuit breaker variance of 10%. So 10% of last night's settle. And then we only allow the contract to move within that 10% on a rolling 60-minute basis. So you look at kind of the lowest bid, highest ask, and you find that 10% range in a 60-minute window. So that allows the market to flex, but still maintain an orderly price discover mechanism. Should in that 60-minute window, the dynamic circuit breaker be hit, it just goes into a 2-minute pre-open, and then we reestablish what that 10% is. We reestablish the 60-minute window. So it does have a relaxation feature once the trigger is hit, gives the market a slight cooling off period, and then allows new price discovery to happen on the back end. For both Bitcoin and Ether, though, we also have what's referred to as a hard limit, which is a 30%, so 30% upside, 30% downside. That's a hard limit for the day based on prior day settle, and the contract price cannot go beyond those bands to the upside or downside in one given trading session. And these are features that we have on many contracts at CME, not just cryptocurrency, because in our experience, it helps maintain that orderly price discovery, which is one of the central things we're responsible for at the exchange.
Okay. Is cross-margining available between BTC and ETH contracts?
Yeah, and that's something we're excited about. So when we introduced Ether Futures, we now are able to have, now that we have two cryptocurrency futures, we can now offer some capital efficiencies between the two. And at present, and I encourage people to always check with their clearing members, and you can see this at cmegroup.com because they are subject to change, that offset is 50%. So there's a 50% savings between, or an offset between the two, Bitcoin versus ETH, in the right ratio, of course, given the contract size differences.
Okay. So with the price of Bitcoin rising, looking into the future, are you seeing a demand for a mini contract, perhaps?
That's a great question. We certainly, tough to tell what we'll do going forward, but folks, I think ever since we launched back in 2017, people have always been asking us for a one coin contract, this size contract, this, overwhelming feedback around what the size of the contract should be. But I do think at this level, it's a more interesting question, and we'll continue to keep our eye on it, engage with customers. No decisions have been made yet, but we'll continue to work with customers and figure out what they need and make sure the contracts we have in market, or if we need to introduce additional contracts, we'll always be focused on giving them all the tools they need to manage their risk. Okay.
And so if I were to ask you what might be in the potential pipeline from a roadmap perspective, can you provide us with any insight into what you might be looking into next?
It's always a tough question because, just 8 days after we launch, people always want to know what's next. And
I know.
Right now, we're just really focused on, making sure Ether remains successful, really takes root. We're still very focused on growing Bitcoin and Bitcoin futures and Bitcoin options. That's going to keep the team busy. We continue to listen to folks, but I would just remind folks that are watching to keep their eyes on a few things, right? Where it's not just the tradable products we focus on. So one, if you need risk management tools, please let us know. You can reach out to us and track us down. But also if you need reference rates and pricing products, because we also have that other part of the product portfolio that we also work on, where we first launched reference rates and we have real-time indices. So I just encourage folks to watch both. And if they need things in terms of reference rates or indices or tradable products, to let us know. We're all ears. But right now our focus is on Bitcoin and Ether.
Brilliant. So if people do want to get in touch with you, Tim, how can they get in touch with your team or yourself? How would you prefer people?
A great way to go is cmegroup.com/Bitcoin or /Ether. Our contact information can be found there. You can also reach out to me at tim.mccourt@cmegroup.com or equities@cmegroup.com is my team's email address. So yeah, I just send people to cmegroup.com because that's also a great resource, not only for figuring out how to get in touch with me and my team, but education. Things are, if you have more questions around circuit breakers, margin, how some of the futures products works, contract specs, cmegroup.com is a great source for all things you need in terms of education or questions, or if you need to get in contact with someone at the exchange.
That's superb. I normally ask my guests for their, Bitcoin price prediction, but I'm going to let you off the hook, Tim McCourt.
That's good. That's good.
It was a real pleasure to have you. Thank you so much for joining us.
Thank you for having me.